It's time to check in with Amanda Lang, host of Taking Stock, which airs Friday evening at 6 o'clock on BNN Bloomberg and on the iHeart Radio network. And Amanda, I guess we'll start this week with a story that roiled markets. Now, this is in the U.S., but let's face it, Canadians watch this story about a bank failing and think back to 2008, 2009 and wonder, are we in danger here as well? So let's start from the beginning. What happened?
Yeah, Silicon Valley Bank, of course, now it's at the beginning of the week, ended up having to be closed down. There was a run on the bank. Basically, its depositors lost trust in the bank, which is the worst thing that can happen to a bank. And the regulators had to step in and take over, fire the board, fire the executives. And they have promised to make depositors whole. People who have money with the bank won't lose money. People who own the stock of the bank just got wiped out. What happened? Silicon Valley Bank made bets based on interest rates. And really, to simplify it, they made bets assuming rates would stay low for a long time. And of course, rates haven't done that. If they had a long time to wait, it would have been fine. But investors got antsy and wanted to pull money out, and that caused them to run into trouble. The real question for the banking system and for Canadians especially is there more like that? And it's sort of a two-part answer. Part one is, yes, there's all kinds of bets that were made on rates staying low, and those are going to be wrong, and that's going to cost some money for many. Is there widespread failure ahead? The answer is no, and certainly not in Canada, and that's because of regulations that were put in back after the credit crisis that's going to keep us a little safer.
So that was an American bank. I know there was First Republic that found itself in the same situation, and then a couple of days later, all of a sudden, Credit Suisse, big bank as well, and a problem there.
Yes, although we will put Credit Suisse into a different category because that Swiss bank has been in trouble for about 5 years, and real trouble, and we've believed it to be almost on the ropes several times. So it was in turmoil long before rates started to rise and these investments started to go wrong for banks. However, it probably has been affected by some of the same issues, and they're complicated to explain in a short time, but you will find many banks have the same problem, which is that rates are moving the opposite direction than they expected. And in the short term, that can cause troubles. However, if you are well regulated, as we are here in Canada, you don't need to worry about that.
Okay, because I often wonder with these regulations, maybe that we have a false sense of security, but we should feel safe here in Canada.
In Canada, absolutely. And the bottom line is, banks do a really simple thing, right? They take our money and they put it in the bank for safekeeping. That's why we put it there. But they lend it out, right? That's their kind of core function. So when we want our money back, it's not always there. Technically, it's been loaned out. What the regulations do is require a certain amount of money to be on hand. So they can't lend it all out. And a big bank in the U.S. is really regulated strongly to that effect. In Canada, we have very strong capital requirements, they're called. They have to keep a lot of money around. And it limits their ability to lend out money. So you can argue there's a downside to that. The upside is you don't get runs on the bank in the same way.
I was going to say, it's so odd to even hear that term, right? A run on a bank. That sounds like it's from 100 years ago.
Yeah, it does.
Well, it's right out of It's a Wonderful Life. It really is. If nobody does it, the bank won't fail. If everybody does it, it's a foregone conclusion that the bank goes down. And I will say one new little wrinkle here is, when Jimmy Stewart was trying to fend off a run on the bank, it was human beings who have to line up outside banks, right, to go in and talk to a teller. Now people do it sitting at their desk with the swipe of a mouse. So it's super easy to take your money out. Maybe too easy. So when people get nervous, it's gone in a flash.
Well, there's something new to worry about. All right, let me go to something else. New data showing a permanent hole in the economy. Now, this is, we're talking about in Canada, and this is pandemic related, right?
It is. So this is data that came from StatsCan. So it's basically showing kind of the growth in our overall economy. But Trevor Tombe, who's a professor at the University of Calgary and wrote for The Hub about this subject, I'm going to give him credit for this because he kind of unearthed the data. He's on the show today. And it's a big hole. Basically, because we had lost economic output, we shut everything down. It's tempting to think you just revert right back to where you were. But of course you don't. Whatever you didn't do is forever lost. So it's actually a 6% reduction in our total output that's permanently gone. And to put that into context, that's equal to $180 billion, which is bigger than our energy sector. So it's like wiping out the whole energy sector. Wow. So it's a big hole to climb out of when we talk about kind of the effect of the pandemic, and have we recovered? In many ways we have, But we do have this. This is a serious kind of long-term consequence that we are going to have to grapple with.
Do we have any kind of historical perspective as to how long it might take to get that all back?
That's a good question. I'll ask Trevor that. In fact, thanks for the question. Because I think you could probably look back at things like, world wars perhaps as being this disruptive.
Right.
Maybe it is the previous pandemic. You might look at the UK and see what happened there. My answer is I don't know the answer to that, but I can tell you it's not something that's easily done. It's not something that governments can do, because if they could, it would have happened, right? Given the amount of stimulus our government's put in place during pandemic, that may have staved us off even from going even further in a hole, but it didn't keep us out of a hole.
All right, let's get to this next story, because I think just when you thought it couldn't possibly get any worse when it comes to air travel, Flair Airlines having their planes actually seized this week. Will it ever get better, Amanda?
That's comforting.
I mean, this is a question that we wanted to ask, because Flair has a very specific problem, which is that it's the leasing company that it leases its planes from, as a lot of airlines do, kind of ran out of patience with missed payments and took planes back. And Flair is actually suing them for $50 million because of the way they did it, which was kind of without a lot of warning, Flair says, late in the day. So people were literally boarding, midnight flights, and then the plane's keys, metaphorically, were taken away. It was very disruptive. But it points to a bigger problem, which is that there's a lack of capacity in the airline industry. In other words, there are fewer planes flying than we need to do the flying we want to do, which is why, if you booked a flight recently, it's expensive. It's more expensive than in memory. And that's not going to change until they can get more planes in the air. And Air Canada just told us it's not going to be till sometime next year when they're back to their normal pre-pandemic capacity.
My question on Flair is, if you think about this from an individual perspective, a personal perspective, you're late paying a bill. They call you to tell you haven't paid your bill in 3 or 4 months. We're canceling your card. That sounds like exactly what happened here. I thought the creditor said Flair was aware of this and had chosen simply not to pay what it had to. So you kind of wonder who's in the wrong here.
Yeah, and how are they suing?
Yeah, I think that's right. And there is a process that is followed here. These are contracts. So if you're in arrears on a payment, there's a process that needs to be followed before something, if you owe on your card, the people can't just come take your card. You get warning, there's a grace period, then it's now in default and they may come take it. They might not warn you when they're going to come get it, by the way, because you will hide it somewhere. So not that you can hide a plane easily. But there's kind of to your point, this doesn't come out of the blue. Where I think Flair's going, and it's an interesting, bigger picture story about our market, is that there might have been a little bit of favoritism on the part of the leasing company because they could sell the planes quickly to one of Flair's big major airline competitors in Canada. Mm-hmm. And Flair felt like there were sharp elbows up and people want them out of the market. Don't know if there's truth to that. Not suggesting I think there is, but that's kind of the argument that's being made. So, and I do think it might be an interesting little court case.
Let me ask you then, do you think we need more competition?
Well, let me tell you this. Flair fills a gap in the market, right? We will fly Flair. Because the big question for me, I have the CEO on the show today, and I said, how can people trust you? Should I buy a ticket on Flair knowing that you have now 4 fewer planes? Can you fulfill your commitments? And he said, absolutely, it is completely, they're already figuring things out. Keep buying the tickets. It's all going to be fine. Of course he would say that. But I would say, will Canadians fly Flair? You know why they will? Because it's a good price.
Yeah,
and we
cheap.
need a good price. Mm-hmm. So they do fill a hole in the market that is it's very attractive. Do we need more competition? Well, Flair would say we need discount airlines because the major carriers are very expensive.
Right. Which I guess is a pretty good answer because it's true. Amanda Lang, thanks so much for the time. Appreciate it.
Always good to talk.